Up next, I've got Nick Matich. He is Executive Director of Heavy Minerals. ASX code is HVY. Now, they've got 100% of the Port Gregory Garnet Project in Western Australia. And the wonderful thing about this project is once they've extracted the garnet, they put the, I guess, the contents, I guess, the dirt back. So you don't really know that they've even been there. It's more like a quarry operation. It's really clever. So welcome, Nick. Good to see you. Looking forward to this update, focusing on garnets as an industrial mineral, not as something to go on your finger, ladies and gentlemen. Nick, over to you.
Thank you very much. Appreciate the introduction and very happy to be here today. Yes, so as you mentioned, I'm the Executive Director and CEO of Heavy Minerals Limited, and I've got a fairly unique investment proposition for the listeners today, and that is industrial garnet. So I'll just get straight into it. The usual disclaimer here for those that need some light reading at night to get to sleep. So HVY or Heavy is an industrial minerals explorer with two key mineral sands projects. Our primary focus is the Port Gregory Industrial Garnet Project in Western Australia, which has an exploration target of between 3.5 to 4.5 million tonnes of contained garnet. Now, for those that are unfamiliar with the industrial garnet market, this is a pretty substantial target in that it's approximately 3 to 4 years of worldwide demand. So the project itself is in the heartland of the largest garnet producing region worldwide, with our tenure bordering the GMA Garnet mine and the ASX listed RDG Lucky Bay mine. Now, both of these, when in production, will be the two largest mines worldwide. So by 2025, we believe that the region is expected to produce somewhere between 40 to 50% of the world's industrial garnet. So we recently completed our maiden drilling program at the Port Gregory project in January this year, and we're expecting to announce the maiden JORC mineral resource within the next 3 to 4 weeks, so just towards the mid to end of April.
Nick, before you go on, just if you could remind us, what is industrial garnet used for?
So it's typically used as an abrasive is probably the overall sort of caters for everything. So it can be used to blast off rust, to prepare surfaces for painting, to strip paint, and then also the biggest sort of the growing market is as in water jet cutting, which is to where you use a high pressure jet of water which is sort of infused, for want of a better word, with small garnet particles, and it can pretty much cut through anything given the high hardness of garnet. It's getting up there about 7.5 to 8.5 on the Moore scale, which is there's only a few materials harder than that, such as diamond. So it's it's used in industry. I've actually got a bit of a story, a bit of a blurb on that a bit later in the presentation as well, Kerry. So should be very informative. So we're kicking off our metallurgical test work this month. We've got some samples being sent to Queensland to do some work, and also XRF work in Adelaide. So that will be fed into the scoping study, which we have planned to kick off, and also the resource model, which we have planned for this month. Our scoping study itself will be kicking off this quarter, and anticipated delivery is Q3 22. Our other project, which is more on the traditional mineral sands, is the Inhambane Heavy Mineral Sands Project in Mozambique. And there we have a JORC Inferred Mineral Resource of 90 million tonnes at 3% total heavy mineral. The assemblage is ilmenite dominated, with credits of both zircon and rutile. And the project is adjacent to what was recently the Mutamba project, which was a Rio Tinto and Savannah joint venture. That had a JORC resource of 4.4 billion tonnes at 3.9% total heavy mineral. So that project itself, that's really an elephant country. I mean, that's a world-class deposit itself. Moving on to the company itself, we've got a really tight capital structure with a shade over 60% of the company held by the top 20. We've had a lot of support on market by our institutional investors, with Metal Tiger, Valens International, and Hunter Capital increasing their positions substantially since the IPO on market, which has been great to see. So they've been really supportive of us. And as at December 31, which is our last release of financials, we had an enterprise value of 5.1 million, with 3.61 million cash in the bank. So that left us with the market cap of sub 10 at 8.72, and which in my opinion offers a pretty attractive sort of investment proposition, given what I'd like to think is the potential upside from our near-term projects. Moving on here, the team itself. So we've got a really good mix of experience and expertise, with which to deliver our outcomes for shareholders. We've got the technical know-how from both a geological and engineering perspective. We've got some great industry contacts in the mineral sand space, and we've got proven access to capital markets to bring our project through the full life cycle, from exploration, development, and then to potentially to production, which is our ultimate goal. So moving on to the Port Gregory Garnet Project. So first off, though, I'd like to just do a bit of a explainer on what is industrial garnet for the listeners that aren't familiar with it. So industrial garnet, as I explained, Kerry, is an abrasive. It's either used as a blasting media to prepare or clean surfaces, or in water jet cutting, which is where the majority of demand is coming from now. The end use is dependent on the size of the grains that we're producing. Smaller grains are generally used in water jet cutting, with the coarser grains used in blasting, and then the very large, very coarse grains used in water filtration. Alluvial almandine garnet, which is the material we have at Port Gregory, has got many properties that make it the preferred abrasive. It's got a high hardness, and it has non-fractured grains, unlike hard rock garnet. And faster, and this sort of means that faster cutting and blasting rates can be achieved with this material compared to alternatives. In addition, the material can be recycled many times, which means that overall job costs, because if you can recycle it more regularly, you can then do it repeat use. By being able to recycle it, you can reduce cost of overall jobs, which is a key selection criteria and differentiator between this material, our industrial garnet, and say synthetic products. Another neat aspect is that garnet's inert. So from an occupational health and safety perspective, any dust is there's minimal dust to start with, but any dust is not toxic. And so this is great from an OHS and environmental perspective. So the market itself, garnet's typically sold either as a concentrate or as a sized and bagged product. The bagged product typically commands anywhere up to 100% premium on a concentrate. Anywhere up to $400 to $600 US a ton, depending on where you are in the world, and depending on the availability of each particular product there. We will be looking at the value add option of a bagging plant in our upcoming scoping study, because we see that as a sort of a no-brainer to add some real value there. If you look to the right here on this slide, you can see the pricing and the production graphs for the last 5 or so years. So key thing to note here is the drop in production from 2016 onwards, and that was primarily due to the banning of heavy mineral sand mining in India and the logistically challenged Harts Range mine ceasing production. And this has essentially created a supply constrained market. And as you can see, there's been a corresponding increase in pricing from 2016 onwards, from the low 200s up into the sort of mid to low $300 US a ton. That works out at about a compound annual growth rate of 8.7% in the time period. So there's strong tailwinds for us potentially coming into the market. From a demand point of view, forecasts, a 6.7% compound annual growth rate from 2021 levels up through to 2030 to approximately 1.8 million tonnes per annum. Again, as mentioned, the garnet market is supply constrained, and there's a significant and widening deficit expected as of about 2022 onwards, unless new materials brought onto the market. So by 2026, there's a forecast of 250,000 tonnes and a 540,000 tonne deficit by 2030, with pricing sort of a base case of 250 US a tonne, which is indexed to 2020 levels. Currently, pricing in the US is around the $330 per ton. Now, these are the concentrate prices, not a refined product, which, as I mentioned, can fetch up to 100% more. So we see a real options for heavy in the short and medium term, and obviously long term, with a good quality industrial garnet, been hard to find, and especially the sort of the premium alluvial almandine garnet. So we see limited supply, increasing demand is a perfect situation for us as we try to get onto the market. So let's look. So since listing in September, I mean, we've only been on the market 6 months. We've delivered on our strategy of really rapidly progressing our project. The key milestones for Port Gregory include 5,600 meters of air core drilling, and covered a footprint 40% larger than that of the original exploration target. And we delivered some pretty spectacular assay results, which I'll get to on the next slide. And we also secured an additional 45.5 square kilometers of ground just to the east there, E705934, and that borders GMA's exploration and RDG's exploration ground as well. So we think we've gone to something there, and we'll get to it once we get a bit more work done on the ground for our second phase potentially. We haven't been sleeping on our second project either at Inhambane. We've increased the land under mining application to 214 square kilometres and increased the JORC resource by 60% to 90 million tonnes at 3%. And look, Kerry, I know you're an investor, you always like to say that, and I know that news flow and upcoming catalysts are important to the people out there that like to see share price appreciation. Mm-hmm. So in the immediate future, as I said, we've got our maiden JORC mineral resource coming out for Port Gregory this month. And that's followed up by metallurgical results for the project, which will then be fed into the scoping study, which we have planned for delivery in Q3. These are pretty substantial milestones in the exploration potential, developer, and we're running full steam ahead to get these done. We've got metallurgy results for Inhambane due within weeks, and that will be able to delineate the characteristics of that material, which will then be fed into its own separate scoping study. So, all of these steps that we're taking now, I think now are the appropriate precursors to moving our project from exploration to development. And look, I think that's something I really want to stress. We want to build mines. We're not here to explore continuously. We want to develop these projects and take them through the full life cycle, and as soon as practically possible.
Yeah, and Nick, it's interesting. One of the things I wanted to just quickly ask you is, the last time we spoke, we talked about the Port Gregory project in WA. You've now got Mozambique as well. I was just curious as to why the addition with the Mozambique project, because haven't you got your hands full with WA?
Oh, we do, and we haven't allocated any expenditure to that project yet, but it's a fantastic project. We've always had it, so we've had it since we've had it for quite a number of years, and as I said, we're working towards slowly developing that project, but our eye is on the prize at Port Gregory. We see that as being potential cash cow. If when it gets to development, I can't make too many promises, or the ASX will get onto me.
Exactly.
It's a fantastic opportunity, and I'll get onto it a bit later in the presentation. But it has a mineral assemblage that is very much very desirable by through the world at the moment. There's the ilmenite dominated assemblage, especially if metallurgy results show that it's got a high titanium content, that could really set it apart and make it a potential development story as well. But as I said, we haven't allocated significant funds to it. It is in the background, and we are. What I'm just trying to point out is that we have a project. We're not sitting on it. We're trying to move it forward. We're not. That's sort of our ethos, is to be nimble, and take these projects through the life cycle. So it's sort of just.
Yeah, well, you've certainly been nimble so far. So well done, because you haven't been listed for that long, and you're really getting on with it. So let's talk about the drilling results.
Yes, look, these are the nitty gritty. I mean, that's why we're here. So our maiden campaign focused on drilling out the exploration target, which we've got here in blue. And as you can see, we covered quite a bit more ground to the east, and that was about 40% more ground, which is a huge result. In the campaign, we had some absolutely cracking hits, and a lot of the hits weren't just high grade, but they were consistent over depth. There was depth to the hits. There was width to the sand packages. Essentially everything you want to see in a mineral sands project. A couple of the key ones, project hits from the western side of the tenement, where there was a very high grade. Not strand line, but a high grade sand package. It's quite a narrow but very high grade package on the eastern side of the dune there, but on the western side of our tenement, if that makes sense. We had 23 meters at 11% total heavy mineral from 12 meters, and then my personal favorite is 13 meters at 17.9%. That's from surface. And that's another key thing to note, that this should be in any operation, should be a free digging operation. There's very little to no overburden. Again, we'll have to look at any potential mining pit, but again, it's from surface is great. That's what you want to see. Outside of the exploration target, there's a much larger in terms of width sand package, which delivered hits like 27 meters at 5.7%. Total heavy mineral from 1 meter down. So, that's great. I mean, these are shallow, high grade intercepts. They're analogous to GMA and RDG's ground, and they've been shown to be low capex and low opex operations, which, I think, looking through the looking glass, we can potentially see something similar here. Another real positive from the assay results from this program was that the fraction of garnet inside the total heavy mineral was between 65 and 75% on average, and that's over 1.5 times what we used in the model for the target itself, and it also included a fairly healthy ilmenite credit in the assemblage. So, and that wasn't included in the overall target. So we're really pleased with what we saw and what came back from the labs. So watch this space in a couple of weeks when we drop the resource.
Nick, what do you when you talk about garnet fraction and it being 50% more than GMA next door, what is garnet for? What does that mean in terms of, if I'm an investor looking at this, why is that important?
Oh, okay. So it's just to correct you, it's not 50% more than GMA. What it is, it's 50% more than what we used in the model. So when you drill mineral sands project, you end up with a light fraction, which might be, in our case, for some of these hits, let's say we had 17% total heavy mineral. So that means 17% of the sand is heavy compared to a light fraction. Now, inside that 17%, you have heavy mineral that is valuable, such as garnet and ilmenite, and you have then some that, it's waste, for want of a better, waste or slimes. So of the 17%, 75% might be, well, in this case, is garnet, which means if you take 75% of 17%, let's call it 12% to make the numbers nice and round. 12% is going to be the head grade of that particular bit of sand going into the plant. So it's just a slightly different way of thinking of things.
Yeah, got it.
So hopefully that's made sense to the investors as well. Now let's look at we've actually already got a model up and running of the block model for the resource up and running. We're just, as I said, awaiting the assemblage results, which should be in mid to third week of April. So of key thing to note here is on the eastern side, there's this very large and wide sand package, which is open to both the north and south. Importantly, this is open into our tenure already, so into our tenure E75-160 and 5934. This particular package is also up to 30 meters deep. This is the 5% at 27 meters. I've also included a type section here, AA, which captures the high-grade western zone. And as you can see, there's some seriously high grades in here, and also shows a couple of the characteristics, which is the shallow depth and these high grades, which is, everything, again, as I said, everything you want from a mineral sands project. So again, from a mining perspective, you've just got to think, high grade shallow mineralization typically leads to low operational costs. So everything is a great result. So we're also the largest tenure holder in the region targeting garnet, and we've got some prospects along the coast which we think has the potential for a similar style of mineralization. So we've got 50 kilometres of underexplored coastline along the on the coast there, and on the inland we've also got that tenure that I said we picked up, which is borders both the GMA and RDG ground. Importantly, the underlying geology is the same throughout the tenure, which is coastal dunes overlying the Tamala limestone. So for the geos out there, they'll understand that mineralization should be fairly typical along the coast there. And we're also finalising land access agreements and surface rights agreements with some key landholders in the area, which should provide access to mineralisation, which are extensions of our current target, and also potential satellite deposits, which we hope to get to in the second phase of drilling. So importantly, the Port Gregory project, which is the blue shape up here, I think has the potential to be a generational asset on its own, and that coupled with the upside provided by the underexplored ground really secures us as a company with genuine production potential. I'd like to just quickly touch on our Inhambane project, which is the traditional mineral sands. Pricing for these products is linked to GDP, and since the lulls of COVID in the 2020s, market participants have really seen a strong increase in pricing. In particular, ilmenite, which has increased by 60% from 2016, so it's 10% year on year, which is really had a rocket under it. Zircon's in a similar fashion is nearing on $2,000 US a ton, and that makes up 30% of our basket of mineralized assemblage by pricing. Sorry. China accounts for 55% of demand for zircon, and not 100% sure on the percentage of ilmenite, but it's one of the main end users. And with their GDP increasing 5% year on year since the mid 90s, I don't really see any reason that demand won't continue to increase further, which will put appropriate price pressure on our mineral suite. In terms of market,
just got a couple of minutes left, Nick.
I'll wrap this up in 2 minutes, no problem. In terms of the market drivers, the story is all about urbanisation and lack of supply, in particular titanium dioxide concentrates. There's been a few real kicks to the market with the suspension of Richards Bay mines there, the Sierra Rutile project shutting down for a while, and the war in Ukraine. The first two, they've sort of been partially resolved. However, there's still significant risk to supply, and people are scrambling at the moment to pick up mineralisation wherever they can. Just the project itself is, it's 214 square k's of prospective ground, and next to a highway, high voltage transmission lines, and the port of Inhambane. We've only drilled a fraction of the project, but more importantly, defined that resource of 90 million tonnes at 3%. There's a very low slimes content at 5%, which is a fantastic for any future production. And the mining application is being lodged, which we anticipate being approved in the next 12 months. This is a quick one on that project. So I think in summary, I'd like to say that we have the two highly prospective projects in commodity spaces where the supply is dwindling and demand is rising. We've got the right team to deliver shareholder returns, potentially over decades. And all this in a $10 million market cap company with 3.6 million in cash.
Nick, we're running out of time, but I really want to ask these quick questions from our audience. What do you see as the key headwinds facing the company, the sector? Because at first glance, the EV of 5 mil for such a project seems very attractive.
It does. Key headwinds for me would be essentially is moving to development, would be finding I think everyone's facing at the moment is manpower. That's one thing. One thing is I think when we start going down I don't from a project perspective, I don't think there are any issues. It's external factors that will play into that. The market for minerals itself is going well. I think the projects are prospective enough to warrant taking through the full life cycle. And I think it'll just be getting people in and actually, being able to build the project itself, so that it's more of a technical as opposed to a geological problem.
All right, last question very quickly. You've got to spend capital on the project. I'm assuming he means Mozambique before April 23.
Mm-hmm.
What are your plans for that?
Well, that's that particular question. That's in regards to the Tinto expenditure project. But we've got till 2023. We've proven that we can raise money on the market. There's a couple other things we're working on with our JV partner over there. I don't see that being a problem. We've got an easy way to, we're a publicly listed company, and if we do need to raise funds, which we did earmark in our prospectus it would be next year, and by that stage, I'd like to think that our share price will be orders of magnitude higher where we are now, and happy days.
Well, Nick, you've certainly not let the grass grow under your feet, or should I say the garnets grow under the sand. Thanks so much for joining us at the NWR conference, and we look forward to an update in the near future. Cheers.
Thank you so much. Cheers. Bye-bye.